Hey everybody, Chris Lipper from On the Bus Sales Training Coaching Consulting, and welcome everyone to the May Lunch and Learn. Just before I introduce Renee, we do have a few Lunch and Learn scheduled that you might be interested in. June, we have a Lunch and Learn on public speaking, which I'm excited about. I know everybody thinks they're great at this, and we've all gotten much better during Zoom, but I think we can all improve, myself included, so I am looking forward to that. In September, we have a Lunch and Learn on creating job descriptions and job postings. And I think for many of us, that's so important because I know that many of you struggle with not just interviewing and getting the employees, but keeping them. And maybe your posting has something to do with that. So we'll talk about that. Next month, in June, we do have our trade show as well. So please attend that on June 2nd. If anybody would like to exhibit, there is still time. The first class for the exhibitors is next Thursday, and the second class is on the 27th. With that said, I'm excited about today's Lunch and Learn, which has to do with profit and knowing entrepreneurs and being an entrepreneur. I'll speak for myself, but I tend to measure success, and I tend to measure my excitement based so much on revenue, and I don't think about profit a lot. And profit's a number that's probably more important than revenue. How much of the money do we get to keep? But the way we all think, because we eat what we kill kind of thing, and it's just I think this is important, and Renee's the person to give this talk, and I will leave it up to Renee to describe what she does. So Renee, it is yours.
Okay, thank you. So we're going to go over a couple different scenarios today, different types of businesses and how they might look at profit. So I thought I would just kind of get a feel for the audience and how many people here in the audience have employees? If you could raise your hand. Okay. Okay. How many people are LLCs, or where your payroll really doesn't show up on your income statement, you take a draw? Okay, so we got 2. What about you, David? Okay, so that's okay. Okay. How many people in the audience are regularly receiving their profit and loss, and they maybe are not looking at it, or they're looking at it? How many people are getting a profit and loss monthly to look at?
Wait,
okay,
that's
great.
A two-sided question. You said how many people are getting it and how many people are looking at it. Those are two different answers.
Yeah, okay, yeah. Well, it's okay. I just want to know if you're getting one. So, okay, so it's like 4 people that are getting one. Okay, all right. Okay, so I'm gonna share my screen and go over kind of the basics of what a profit and loss and balance sheet are, because I don't know really where anybody's at yet. So we're gonna spend a little time on the basics, then we're gonna delve a little deeper. So I'm gonna share my screen. Okay, so let me just make this a little bigger. All right, so I made up like a profit and loss. Can
you make
see that, or should I
make it bigger?
Yeah, that's what I was gonna do. Okay, so I just made up a income statement for a company called ABC Websites. So if this person is building websites, they have payroll, they have employees, it's not a sole operation. In some instances, if you don't have payroll yet, then obviously you wouldn't see a payroll number and loss. Okay. When you're first looking at loss, getting numbers, you might have different types of sale or different types of income accounts. Like if you sell services and then maybe you sell product, or you sell, maybe you have different divisions of your company. Like an example would be like a landscaper. Maybe they got their snow removal division, they've got their landscaping division, and then plantings, let's say, or lawn maintenance. So depending upon what your portfolio of items are, you might have different types of income items. Okay, so that's the beginning of your income statement. This is the sales figure. In this particular instance, 215 are the sales for this particular little fake company that I made up. So Chris was saying that, yeah, entrepreneurs sometimes look at just the sales figure and they kind of forget about everything else. Or they're not really sure what their profit is because they don't really know what else comes off this. You know, like what are you paying for with all this income? And why do you have a lot of money in your bank, or why do you have no money in your bank? And we're going to kind of look at that today to see different things on your income statement, some stuff that shows up on your income statement, some stuff that doesn't really show up on your income statement. So companies that perhaps that employ, let's say they have employees and they produce a product. So if this is a website company, they're using their employees to buy software and build their product. So like, even in like my case, so I'm a bookkeeping service. So I have employees, they do the work. So they would be listed in this section, would be payroll and salaries. And I do buy some software too. So all of that would be in cost of goods sold. So we're going to get into that in a little bit, but we're just going to move on. All right. Then you've got items that are more fixed expenses. So like your telephone, and that's usually generally fixed every month. There are some things that fluctuate, like your advertising. You have your truck expenses, your car and truck expenses. We got credit card fees. I left these blank for a minute here. Dues and subscriptions, food, insurance, you know, we're going on and on. If you are, so for the S Corps and the people that are on payroll, your payroll is going to be showing up in cost of goods sold if you're performing the work, or you might have some of your payroll down here in expenses for maybe the administrative work that you do. So the people that are overhead, which are like admins, let's say you have a front office personnel answers the phone, or someone who's doing your campaign marketing, their payroll would be down here in the expense items because they're like fixed, and the work that you do is going to cover their payroll, right? So they're more like a fixed expense. So they're going to be in this section of your profit and loss. They're going to be below in all the expense items.
Hey, do we hold our questions?
I'm going to probably pause for a moment when I'm done looking at this.
Okay.
So maybe write it down.
Yeah.
I might end up answering some stuff. So I'll go over this and then we'll pause for a moment and we'll ask some questions. That's a good way to do it. So in here you have all your fixed expenses. And then you have your operating income, which is, well, actually you have your total expenses. That's not including your cost of goods sold expenses, okay? Your cost of goods sold expenses and your total expenses. Once you take them off your income, then you have your operating income, and then your little miscellaneous stuff is at the bottom. Like if anybody got any grants this year, if anybody got anything like out of the ordinary in their income, it would show up as another income or other expense. So like in here, you have your interest income. This one has late fee income included. And then you have your net income, which is after everything. Okay. Other things I wanted to just go over that for an LLC, your payroll does not show up here. And the reason being is you're not on a payroll service. You're not getting a paycheck. Okay. So your draw shows up on the balance sheet. So because it's not captured here, you can have like a false sense of making a whole bunch of money because you don't see your expense in here. You know, it's like you don't see anything put in here for your payroll. So what I did was I just added like payroll officer here. We're going to do a little plugging of some numbers in here because you do want to take some money home. You want to be able to see what your whole profit and loss would be if you plugged in, let's say, 50,000 or 100,000 in here. Whereas the S Corps that are on payroll, their payroll is already in their profit and loss. Okay. So I put that in for the LLCs of the group. And I also added a category later, like depreciation and debt reduction, which don't show up in here either, because when you pay off your lines of credit and stuff are on your balance sheet. So we'll go over that in a minute. And then depreciation is another category I stuck in here for, I'll tell you that in a minute. So let's, does anybody have any questions now about the income statement?
Got a PPP loan, would that go in other income?
PPP loan, because it's a loan, goes on the balance sheet. So that's kind of with all the rest of your liabilities, like your line of credit, your credit card debt. That's all going to be grouped under your liability section of your balance sheet. And we'll be looking at just a little simple balance sheet in a minute.
Even if you know it's going to be 100% forgiven?
The the PPP loan. You said PPP, right?
Yeah.
Did you say
Yeah.
PPP? Okay. Okay, I have to apologize. I was thinking EIDL. So let me clarify. Your EIDL is on the balance sheet, and your PPP would be the best place to put it is in other income down the bottom. So your PPP would show up here, other income, and then your accountant kind of writes that off at the end of the year. So they've decided that that's where it should go. With most of the accounting firm, the accountants in the beginning, they didn't know what it. So I was putting it on the balance sheet for people, and then the accountant is doing an adjustment, a year-end GL adjustment to move it to the income statement. So that's what's going on with the PPP. And does everybody know what the PPP is? Is there anyone who has a question that doesn't know what the PPP is? Okay.
So I have a question. I can't see your column titles, so I don't know that late fee income. So that's people who are paying a late fee. That's not late fees that this person.
Yeah, that would be,
paying.
yeah. So that's an income. There's late fee expenses, which would probably be under bank charges. So bank charges, it would be here if you were paying late fees. Me, when I categorize late fees, I just throw it all under bank charges. So your late fees would probably be showing up.
Can we see the column headings, what you're calling these things? The top of B and C?
The only thing is this is expenses January through December for this fake company.
Oh, so it's percentage of income. That's what I was missing. Okay, go ahead.
That's what this is. Oh, yeah. So, right. So we're just going on how to read it. And then we're going to look at the percentage column in a minute.
Okay, so I have a question about, I've always not understood very well the difference between cost of goods sold and just regular expenses, especially since you actually said that the admin salary is down below in expenses and not in cost of goods sold.
Right. If your admin is not producing work for you and she isn't part of an end product, then she should be below the line.
Okay, so
if your admin, let's say, is doing sales half the time, doing paperwork the other half, then you might want to split their salary into half into cost of goods sold and half into expense.
okay,
Because it's more of like the salaries that are in cost of goods sold are actually doing the work and producing the end product, right?
right.
So like with Dan, his guys in the field that are actually doing all the work, they got to be in cost of goods sold,
Right.
because depending upon how much work they do, it's going to directly impact sales. Because
what about supplies and materials that I use to perform the work?
right?
That
If you
go in
need
cost of goods sold?
software, yes. If you need software to do the work, you need to develop a website or something, or if you're paying an outside service to process something for you, that would go up in cost of goods sold to produce your end product.
Right, but
Yeah,
not like my professional fees and stuff like that.
No, that's all below the line. That's all those are all expenses. Stuff that has to be covered by this number, which is.
The difference is what you absolutely have to have to do the work kind of goes in cost of goods sold.
Yes, yeah, exactly. Like a landscaper buying material, they're buying, shrubs, and they're buying paving or whatever the heck, pavers or whatever they do. That's got to be cost of goods sold. And then for me, like, I'm a bookkeeper, so my salaries for my staff have to be up in cost of goods sold. And if I had somebody answering the phones and not doing any work, then yeah, they would be below the line.
Got it. Okay.
Yeah, below in the expense area.
And then you could say net income is really net profit as well, right? It's the same at the very bottom. Because
net income. Yeah, net income and net profit
are the same.
Yeah.
Yeah. Okay.
Yeah. All right. So anybody else? All right, so when okay, so let me tell you about when you're running, the difference between cash basis and accrual. What is that? All right. Accrual is how many invoices did I send to somebody and what did that add up to? So if you are concerned with staying on track with doing the certain amount of billing every month, you should look at your accrual, because the accrual is how much billing did I send out this month? I might not have been paid for it all, and I most likely was not paid for it all, but I want to make sure that I'm making enough billing. I'm billing enough people. I'm doing enough work every day, because you could have one gigantic payment that comes in a month, and in cash basis, it screws everything up, because cash basis is simply what went in the bank. So that's going to help like with your cash flow. You know, if you have collection problems and you're not collecting any money, let's say you just are terrible at it or something, you know, you might have really crappy cash basis income statements because you're owed 100,000 or you're not dealing with your, you know, collecting your money, right? So cash basis is what cash you got, and accrual is how much you billed. Now, the problem with people that don't use the system to bill people, like you don't use QuickBooks to bill people, if you're using QuickBooks, let's say, or your system that you're tracking your profit and loss. If you're not in there billing stuff, you won't have an accrual-based income statement. You will only have a cash-based income statement, which is, you know, your bookkeeper's putting it together after the fact. You might be owed $50,000, but she doesn't know because she's not doing your billing in QuickBooks. So if you're owed a lot of money, it's not going to show up in here. You might be doing better than you think with your monthly billing, but you might be owed money. So you have to really think about that. So that's kind of one of the things, if you're not using the QuickBooks system, that's what I use anyway. Or if you're not getting an income statement off of your billing system. Okay, so now I just want to look at the beginning and income. So all of your income, when we run a percent of income report, which I really, really like, because it shows you what percentage of like your labor and materials is part of the cost of doing business, right? So in this case, like looking at this one, your sales is 100%. And when you sell $1, 30 cents of that dollar goes towards your labor and your materials. So that's like 31 cents, say 31%. So if you're kind of consistent in your bidding and you kind of know how long it takes, you know, your guys get stuff done, you've been billing, blah, blah, blah. This is a really good indicator of how much you need to sell to make 68, like this 68 cents to go towards, or 68% of that dollar to go towards your overhead items. And we're going to get into a little bit of scenarios, like if you up your percentage of profit, it can cover a heck of a lot more overhead items, right? And it would put a lot more money in your pocket. Sometimes just adding a couple percentage points to your overall bidding can increase your profit a lot. So this is just to kind of get an idea. I love this report because it really shows you how you're tracking. Now, last year was a weird year. So, you know, with COVID and everything. So you might want to look at some of your other previous years if you know you're cranking along good, of what your percentage was, you know, unless going forward, you know, we're just in COVID and things are just going to stay like that, you know, or maybe you've got to reinvent yourself because your product line isn't even useful anymore, you know. So it's an interesting time we're in, this whole COVID thing. So, all right, so we'll go on again down to the bottom here. This is showing here that your total expenses then are 32%. But what I like to do is for people that are not on payroll, like Dan is on payroll, so because he's a S corp, right? So he's on payroll, so his payroll's in his P&L. But for people like myself, I'm an LLC. If I want to see how I would be doing, I would plug a payroll figure in, let's say for me. So I'll say let's say 50,000. Okay, whatever you want to make, plug it in and see how much you got to do to pay yourself that. Another thing I like to put in is, let's say you have to replace something in a year. Like let's say you want to replace a car, or you want to replace a car over the next couple of years. You want to put $10,000 in a savings account every year because you want a down payment on a car or something. So put the number in here. So if you have like equipment that you need to do your work, it's not going to show up on here if you've got a loan for that equipment, right? If you're leasing your equipment, that'll be in here. Let's say I lease a copier, and that's a minor thing, but that's going to be in here. But if I decide to buy a copier outright, it might end up on my asset list. It might end up on my balance sheet as an asset. But what if I want to replace that asset in a year? You should plug in some kind of number. Now, I've been thinking the depreciation expense is a good number to plug in there, because it's just going to be a placeholder for you. You want a placeholder because you want to replace a piece of equipment. So let's say I want a down payment on a car by the end of the year, let's say. So I want $5,000 for that. And another thing we're going to talk about later is debt reduction, which people kind of like, and now everybody's got these EIDL loans. This is a debt, that's not going to show up on here. The only thing that's going to show up on here is interest for your debt. Just remember that. Interest is the only thing that shows up on your P&L, because look, you took $50,000, now you owe the bank $50,000. Okay? You spent it on a bunch of stuff. All those expenses are going to be in here, but you still owe $50,000, right? So let me just look at the balance sheet here. This is just a simple put together, kind of basic. In the liability section is going to be who you owe, like your line of credit, credit card, your EIDL loan is going to be in here. So those just kind of sit on the balance sheet, and as you pay them off, the principal, like when you pay off your mortgage, the principal goes against the debt and the interest shows up on your income statement. So if you really, you might be running your income statement and not realizing, like, wow, I'm making these huge payments to my loan, and it might feel like you're making less profit, and it surely is, because you're trying to pay off that debt, right? So just keep in mind that principal payments go on the balance sheet against the debt, and the interest hits the income statement. It's one of those things that can kind of get away from you is debt. So since we're kind of talking about this, the debt, well, let me just look at the income statement. I mean, the balance sheet here. So this is, I just uploaded the QuickBooks, has a demo company called Craig's Design and Landscape. It's a very simple balance sheet. You have your bank accounts. You might have a couple. That shows up in the asset section. You also have your fixed asset, which is, any trucks or equipment or desks or computers or whatever you have that's an asset is on your balance sheet. And your accounts receivable is on your balance sheet, like who owes you money. And then that's your whole asset section. And then you have your liability and equity section. So your liability section is who you owe money to. So I plugged in an AP number here. You also owe your liabilities. So it's going to be your line of credit and your credit card. Now, you want to just keep an eye on your liability section year over year. Just watch to see if you're capping out all your lines of credit, and if you're just, constantly getting in debt. I mean, just watch it year to year. That's one of the ways your company can get away from you a little bit is your debt increasing, and you're not paying it off. Like you're borrowing from this guy, and then you're borrowing from that family member. And, if you start getting into that, it might be getting a little crazy. And then the last section on here is the equity section. So it might be what the owner put into the business, what the draw section is for the LLCs. On the S Corps, this would be called member distribution, because you're allowed to distribute any equity that you've put into your company. You can pretty much take that out without any tax implication. It's already, it's in there. So now liabilities and equity always adds up to your asset. So just so you know, it has to balance everything else. And then your profits plugs back into the here's the net income that you should find on your income statement. So when you run a balance sheet, your net income is going to be what your income statement says. It's kind of feeds into this, and that helps that balances this whole statement. So does anybody have any questions on the balance sheet while we're looking at it?
On the equity, so when you're talking about the equity that you put into the business, like most likely at the beginning, but I guess sometimes you put it in throughout. That's what you're saying is not taxed, because you've already, that's money you're putting in.
Yeah, and
Sort
usually
of already been taxed.
yeah, and yeah, your equity that you like, your opening balance equity, that's the money you put in when you started the business. Okay.
Right.
If you're an LLC, your draw is going to be probably pretty close, like your yearly draw might be pretty close to what your income is if you feel like you're pulling most of your cash out of your business.
Right.
So your draw number might be pretty close to that. It might exceed it, you know. It's a good thing. It's a good thing to look at, is how much money you're taking out versus what your income is. So it's two good numbers to look at. Okay, the draw versus what you're taking out of the company. So in this case, in this instance, like let's say this is an LLC, and I take this number out because this is not on an LLC's. This is the amount that's available. It's the profit that this company made in a year that the owner over the year could have taken out of the company, and probably did.
Right.
Okay. Doesn't mean that this money's available anymore. You know, if we go back to the balance sheet and look at your draw number and look at the detail in that, you probably already distributed it all. You know, you went shopping. Like the LLCs can run all kinds of crap through their business, whereas S corps are only supposed to run business items through their business. If they run a personal thing, it's got to be put under like their loan account. It's got to be hit against their loan account or distribution account, FYI. All right, so any other questions on the balance sheet or the income statement? Okay, so I thought I would move on to a little bit on looking at a little bit of looking at profit. Like we were going over sales. Let me increase this again. All right, let me make these a little smaller. I was trying to do some real world like scenarios here for a company. Like let's say you're a contractor, or even a website design, or something that has cost of goods sold. So it could be anything. It could be some of us here in this room. You sell something, you have to use labor and products to make an end unit. Okay. So that's where we're going into. You sell something for 25. This is the cost of it. I plugged in a percentage of overhead costs. Now this is, if you're somebody has a certain amount of days per year to work, which we all do, we want to go on vacation. Want to go on vacation, you got holidays, you got things going on. How many actual days do you have to work? So I would say everybody should look at something like this. You have 5 days a week, 50 weeks a year. Let's say 2 weeks could get messed up by snow or other weird stuff. Then you take your holidays off, your vacation off. Maybe if you're a company that experienced either rain, snow, indoor work and indoor outdoor pandemic, you know, some of these like contractors that work inside and do roofing and whatever, they might have had a lot of off days. So how many actual work days do you have to do what you have to do? So I would say spend some time figuring out how many actual days you need to work to cover your overhead, which is the girl that's answering the phone, your telephone, your rent. So I'm just plugging away here doing something. I come up with 200 days. Let's say this company has 200 days that it can work. So this number here, fixed overhead, when we go to this profit and loss, that's this number, total expenses, not cost of goods sold. Okay, this is my overhead. This company has $75,000 of fixed overhead it has to cover every year before it makes any money. Think about it. If you turn the lights on, pay the rent, pick up, telephone, all that, you got to cover a nut in this company of $75,000 a year. So when can we make money? Or other things I like to plug into this is, especially for our solopreneurs, is I want to make 50,000, let's say. And let's say I want to pay back some PPP, not PPP. I want to pay back the EIDL. I want to pay back, I've got debt I want to reduce. I got a piece of equipment I want to replace. Plug the numbers in here. So like debt reduction, let's say I want to pay $1,000 a month to my EIDL because, you know, it's a 30-year loan and I'm going to be dead in 30 years. You know what I'm saying? I'm going to, you know, I mean, I'm not, there's no way, let's see, 60, I'll be like 90, you know? So, you know, so I want to pay that thing off, you know? So whatever your debt is, it might be credit card debt. It might be, you took a home equity line or a home equity loan and you put it in your business, whatever your debt reduction is. So I like to, if I really want to get a feel for, how much I got to sell every day to cover all my debt, that's a whole nother thing, but that's why I plugged it in here. And I can send this to people if they want after this is over. I can send this to you and you can plug in your numbers and play with it if you'd like. So, okay, back to projects. So this is a, you know, I mean, even me, you know, a certain amount of days you can work a year, right? So in this instance, let's say, now this is all fictitious, right? So I'm just like guessing. It's somebody that does websites, okay? They're selling a $25,000 website. Their payroll to do the website is $5,500. They needed to pay, I did architect, but it could be anybody's labor, you know, maybe an outside sub that you need to build the website. Any kind of, in here I threw materials, but this is percent of overhead. If they think it's going to take 10 days to build this website, this number here is calculated by this, which is your fixed overhead. So over here in my P&L, when I added all that stuff, my fixed expenses now are 125,000 because I want to make 50. I want to reduce my debt by 12 this year. And I want to buy, I want to put a down payment on a car at the end of the year. All that now I bump that up because I want to, you know, it's funny when you're a solopreneur and you're looking at the profit, you're like, where's my payroll in here? You know, so we put that in. So now let's go back to this project. So if they're working 200 days, that means every day they need to cover $625.98. So if it's going to take 10 days, then it's 10 times 62. I put like a formula in. So this job's got to make this much to cover overhead. The way they price this job, they're still going to make gross profit of $3,200. This also lets you know how much leeway you have in a bidding situation. Let's say the other guy came in at 22,000. You know, you still know it's going to take the same amount of labor, materials, blah, blah, blah. So how low can you go? You could go 21 or 22. You know, you got 3,000 to play with and you're covering your overhead, you're making your money. So this is a little simplified. I'm sure Dan's probably got a spreadsheet that's this long when he prices out a project, right? But just give you a feel for what you should be thinking about how much money you're actually making. And then the overhead thing is those things that we kind of forget about. Like, you know, you've got all these fixed expenses you got to cover. And that's why I added into some of this stuff. So let's go back to, let's say we wanted to, if you want to get to a, like, all right, so that overhead, just so you know, that's like a break even with you covering your pay. So the overhead is covering your fixed stuff. So just think about it as a break even. So if you want to break even and not make any extra profit, you need to cover that 6,000. If your bid was 20,000, let's just say 20,000, and let's put it a little lower. Let's say 15,000. Let's just say. So I want to show you this. Oh, this is losing 6,000. So wait, I think 20,000. You still lose money. So let's give it a shot. Right. In this instance, we're losing $1,700 on this project. So you don't want to take that one. You know what I mean? Like if you're not able to cover your fixed overhead and you make need, you know, are you the one who's going to take it out of your pocket and make less payroll and take this job? Maybe that's it. You're going to still be able to pay your people, but you're not going to get a paycheck. You know, so think about it that way. just, okay, so on to the next one. Let's see. Oh, does anybody have any questions? Because it's getting a little, you know, if it's getting a little complicated, just let me know and I'll try
Yeah,
to.
if anybody feels lost, don't be, this is a place where you can raise your hand and say, hey, go over that again.
Yeah, he's telling me I have to chew on your ear.
Okay.
Anybody? Okay. Nobody? Okay.
What,
So let's go
what
on to.
is, what is,
oh,
oh, sorry, I'm looking at my balance sheet. What is retained earnings on the balance sheet?
the accumulated profit you've made over time.
Okay,
That's the money
Yeah.
you keep.
Yeah, it's like everything gets closed into retained earnings, like what you drew. Your profit gets and your draws get closed into that yearly. So that's over time how it's like accumulating account.
okay.
Okay.
And this overhead, the overhead piece is really, is the expenses, like broken down by a certain amount of days. So it's kind of basically to cover your expenses over and
Yeah.
above your cost of goods sold. Yeah.
Yeah, you
Yep.
need to you need to plug in a number. Like in this instance with this bidding, this is the
Uh-huh.
cost of goods sold stuff, the labor,
Right.
the
But
materials.
Renee, wait, your overhead isn't all your expenses. That's your day-to-day expenses.
Right, it's
So-
not the cost of goods sold.
Right.
Cost of goods sold is this stuff, and then the
Yeah.
overhead is your expenses
Yeah.
below your cost of goods sold. Exactly.
Yeah.
Yeah. So let's go on to you were to sell an item. So I the other day.
So an item could be a
Um,
service too, for those of you that sell services.
Right. So here I did like ABC baskets. So let's say I'm making a gift basket. Let's say I'm a manufacturer or whatever, or I'm making jewelry or I'm doing something like that. So you have your item, right? You sell it for 80 bucks. You have to put in how many hours it takes you to assemble the basket, and you paid somebody, let's say 25 bucks, any miscellaneous cost materials. So your total cost was $45 for this basket. You made $35. So how many baskets do you have to sell to cover that $75,000? Well, it's more than that now. Hang on, let me go over here. It's 125,000. So let's see. It's the same thing over here.
Let's just say a lot.
In here, I said I got 225 days to work. Right. So we got to sell to cover all our overhead. We have to sell 3,577 baskets. Okay. Now, whatever the number is, it is. You know, like it's Chris will tell you how to get to that sale number, right? Through his sales techniques, right? He's going to tell you how to sell 3,000 baskets. I'm just telling you, you got to sell 3,000 baskets. Okay. Don't kill the messenger. But, so if this is what you're selling, let's say you have a service you provide and you charge everybody $800 for that service. And, you could put these same, let's say you're the one providing the service and you want to make, let's say you charge somebody $1,000 for their, let's say $1,000. You could have a whole bunch of these people every month, right? And let's say you want to make, when I work with this client, I want to make well, we already put your salary on the other thing. So who else do you need to pay? Let's say you have software you need to do, let's say, I don't know. I'm just going to plug some numbers in. We're just making stuff up here. But let's say it costs you $250 in fixed in these different softwares you need, blah, blah, blah. So you're going to make $750 in profit. Okay. Now, in this case, you need 166. This is where Chris gets into it. If this is a monthly client, you got to have 166 of these sales. So if you have a monthly client that gives you 12 of these sales, now, you can divide it by 12 to say I need how many monthly clients for the 166. So, or if you know what I'm saying? Mm-hmm. So if you have a repetitive thing you do every month that you're billing somebody $1,000, then that's what you need. So So you could kind of use this little thing to figure it out.
But Renee, I'll tell you where I get pushback on this, and we'll see this next month when we do behavioral goals, is I'll say to somebody, so, what's your break even number in terms of the number of products? And I get this look like, well, how am I supposed to answer that? They all cost different things. And I'll say, so what's your average sale? What's your average ticket? And, so maybe you can help dive into multiple product scenarios for us.
Yeah. So, all right. So let's say say you have a $500 ticket. It has to be kind of your average to plug it in here. Like if your average ticket was 500, you'd have to put, let's say maybe there is no costs. Let's say it's all on the expense section already in my thing. I don't need to do that. Then if 500 is it, then you have to sell 250 of them. So, or your average is 1,000 and all your expenses already, you don't have any other extra stuff, then you've got to do 125 of these, but then divide it by, if it's a monthly service that you sell, or if it's a one-time shot, then you have to sell 125 of them. If it's a one-time shot.
And you can divide that by your salespeople, right? And give them goals and break it down, but that's a different conversation.
Yeah, exactly. Yeah. If you're a solopreneur, then you're doing everything, but if you're not, and you can spread this across, other people, it's still the same amount. You're just going to divide it by how many salespeople you have, and then they got to go out and get whatever way you want to delegate.
I guess
it's another way to look at it.
I guess, Renee, there's not really a goal of what percentage just across the board, because some people's margin is, 50%, some people's margin's 10%, I guess. So if you go down on that spreadsheet, the
overhead?
No, sorry. The overhead. If you go up.
Okay, but this is going back to, it's covering your expenses, not your cost of goods sold. On this one, it's not covering cost of goods sold. Right? So you have cost of goods sold, then your thing here would have some items in it. You pay $25 for, like maybe for an assessment. Let's say there's a software company charging $25, and any other miscellaneous costs that go into you providing this end product, that's cost of goods sold for you.
Right. Yeah.
But you still owe, and you want to be able to cover this 140, this, where the heck is it? Down here.
Yeah. But when you had dollars in the expenses and the cost of goods sold, the difference between the profit and those expenses, that percentage, it varies greatly from company to company.
Oh yeah,
right?
Totally. Yeah, exactly.
And there's not kind of like
items.
There's not this magic number out there that you should shoot for, because it really depends on a lot of different things.
Right. And okay, so it's like comparing you to the person who makes gift baskets. There's just no comparison, right? They're going to sell $80 product, and yours might be upward to over 1,000, right? So, yours might take 10 hours. Hers is going to take an hour, so it's like she can do 10 baskets a day and you'll work on one client for the whole day, so it's so variable and so unique, but you still all have overhead to cover for every day you work.
Yeah.
It's going to be your overhead, right? It's not going to be the same overhead as her. That's another variable, right? That's why I made this, just to kind of.
What about somebody who has a portfolio of companies, and we want to figure out different profit levels, and so you can evaluate what a front-running product should be? Is there a way of doing something like that?
I would spend the time then up here in the sale item that you sold, and then your costs for that sale. So I would individually do each one. I would do, like, let's say a landscaper does snow plowing. They had to buy salt. The guys are working overtime. They're working like 18 hours, so the
Wear
labor
and
that
tear
goes
on
into
the vehicles, everything, right?
Right. You trashed your trucks, like now you need a new transmission.
So Jeannie almost has to do it for every business. Jeannie's got to do it to see which ones are more profitable, which one she has a bigger margin on.
Well, we all do. Dan Jonas also, if he's doing a huge parking lot versus a residential, right?
Yeah.
You have to price that in its own mind and evaluate levels of profit. And where's the job make sense, where it doesn't make sense, and that's where a form like this could come into play nicely.
Yeah, I mean, I could imagine that Dan's form probably has a lot more detail. We're trying to just get you to open your mind of different ways of pricing, and that that you have these overhead expenses that need to be covered. Sometimes we look at the profit of something and then forgot that, oh crap, I got rent, I got my telephone bill I got to pay. Like you forget all that stuff, and you think, wow, I made $2,500. I'm just going to put that right in my pocket. Well, guess what? Your landlord's knocking on your door. So you can't think of it as all profit. It's not. There's after you sell something, you definitely gotta.
But it's definitely a really good thing to know. So I could do it based on my different services, right? And I could figure out which service is really giving me the best bang for my buck. And then the same with Jeannie. Jeannie could know then which businesses are giving her more for less, right? It's the same thing. Like Chris, you said, it's the same for all of us.
And for you, you have to think about the labor that goes into each one of your services. So that's something you can plug into the cost of goods sold area, like without looking at maybe not looking at this profit loss. You just want to know what your expenses are. So maybe get your expense total figured out.
Yeah, I was thinking,
and then how much time do you spend on each one of your things? And that's going to be for you. Like if you're spending 20 hours on something, you really got to capture how much time you're spending on it.
Yeah. So I'm thinking we can do this tab for each of our, either if we have multiple businesses or multiple services. And obviously you have to still average it because each one's a little different, but that's what I'm saying.
Keep in mind, there are going to be times where you are going to want a loss leader, right? So you could have a monkey's paw kind of thing where you're starting on something where the profit isn't there, but it's a shiny object to get you started. My trade shows or Bang, sometimes that's an introduction to the on the bus world, and I'm willing to do these things for less because it brings people in. So you got to look at that too.
Yeah, it's a good point.
Sure. Yeah. If that's the way if you're doing one thing to get a bunch of clients, you're not going to sacrifice that because something else makes you more money, because that's funneling in the new clients. So yeah, I mean, obviously these are the things you'll discuss with your business coach, like Chris, or on your board meeting.
Yeah, but you have a practical approach and I have a sales or an emotional approach, and both are needed, and yours is the harder to understand.
All right, so then I put together this scenario, and it's really just to kind of play with profit a little bit, just to show that if your costs are less, like this one's got cost of 500,000, right? Or actually your profit percentage. What's one I can screw around with here? If you change your cost of goods sold, like you sell something and you could do more sales with less labor or less parts or whatever and increase your profit, it goes a long way. Like, so this one has like a 50% cost of goods sold. So then there's 500,000 available to put towards your costs, your monthly costs. This person's scenario has 300,000 in cost of goods sold. So then they've only got, so they're only making 40%. So they only have 200,000 to go towards your cost of goods sold. So if you can creep up your profit percentage, you can bump that up. Now, obviously the profit, with the same, if you can up your sales, like this one has 500,000. I should put all these in. Let me see this. 1 million, sorry. Let's say.
So when you're putting in sales of $1 million, should we assume this is at year end?
Yeah, like let's say it's well, it doesn't even matter. What I'm trying to say is that if you can make more money, like in other words, if you can up your profit margin by even a couple points, you're going to obviously make more profit, because if you can do the same work, like you can get more money, use the same labor and the same parts, you know, just by increasing your profit margin, it's going to go a lot farther. You're going to make a lot more money. So it's just something to think about trying to get a higher price. So this is why you might want to increase your pricing if you can, if the market can stand for it. Because with the same, let's say the same labor, if you can do the same labor and make more money, you know what I mean? It's just a little something to play with, is your profit percentages. Let's see, what's this one too? Yeah. Anyway, I just made this one to just kind of play around with profit percentages to see how far it would go. But I think really, truly, like this is a good one. About figuring out how much money you're making on every job.
Yeah.
So I don't know, is there any other questions for anybody?
I have one comment. You know, Chris has been pushing me for the past year or so to raise my rates. Speaking of like raising your price, you know, and better profitability. And I was a little hesitant at first, but I did at the beginning of the year increase our rates by about 8.5%. And nobody balked. And especially during this time with gasoline being so much more expensive, and we use a lot of fuel, it really has made a big difference. So you know, if you examine, you know, what you can truly charge, you might get the the push to bump it up a little bit. That's it.
Good point. People should evaluate, if you can, evaluate your pricing yearly and see if there is some room to increase, because everything goes up, right? Your rent goes up, everything goes up.
Dan, what's interesting, and you may have done the exercise before you decided, was it 8.5%? You probably did, but it would be really good to know though how much your cost of goods sold and your expenses increased, you know, and how much you kind of needed to increase sales in order to actually make more. You know what I mean?
It wasn't that scientific. I think you're giving me way too much credit. But,
but I mean, for example, because you said gas has gone up, right? So the question is, how much of that 8.5% are you just getting off the top profit, or how much you're actually paying more in expenses?
Yeah.
That it's covering. Yeah.
So let me preface this by saying that Renee's right and I'm wrong, but I'll tell you that my thought process goes like this, that your guys' inventory is your time. Right. And you got to take a look at how you're spending your time. And if you're so busy that you can't take on next clients, you know, in a reasonable time frame, that's when I say raise your price. So, you know, I always view pricing like making warm water. So it's a little hot, it's a little cold, and you find your balance, and it has to do with your sanity level also. Now that's the way I do it. Renee's doing it the correct way, you know, but there's something to be said for the other side, that pricing is communication. It's a way of communicating with your client, saying, I don't want your business, you know, or it's saying, you know, I really want it, you know, and then that's like that desperate pricing kind of thing. And there's something in between that can work for everybody.
Yeah, but I think you're absolutely right though, Chris. I mean, one person could be making $10 an hour and another person be making $500. How many hours do you actually want to work, right?
Yep. And how many clients do you want to have?
Yeah.
So I position my business where I want less clients than I used to have that pay more. And that's my warm water mark, you know. It didn't work for me the other way. So you should all feel very special. Go ahead. Somebody else had a question?
No, I'm just saying that number also has to be what you feel your value is from what you're bringing to the table. You can't just give away the value of what you have, what you know, and how you can accomplish what you can accomplish. You're worth a certain amount of money, or a certain amount of, and your time is worth a lot of money.
I wanted to also show, and I could put this in the chat, I think, is this calculator. It's a loan calculator for like people that took the EIDL, because remember when I was just saying that I'm going to be really old when my EIDL 30 years, like, come on, really? So some people might really want to pay it off earlier or have some idea on how. Now, some of you might have used these loan calculators let me see if I can find my, well, I'm definitely going to put it in the chat, but it's so like mine was actually 69,000 something, 30 years. That's roughly what my payment is. If I want to pay it off in 15 years, then, you know, you just recalculate. Come on, it might not work. Okay, there it goes. That's not it. Oh, 476 a month if I want to pay it off. Okay, it's 30 years, I think. There it is, 290. Yeah, I think they're telling me. Yeah, so like, really want to pay it off in 15 years, which might be more realistic for people. I'm not telling you what to do, you know, but I will drop this little loan calculator off in the chat. So if anybody wants to run their EIDL thing and see.
One thing to be
So any-
careful of though, Renee, and I don't know if it applies to the EIDL, I honestly don't know, but with business loans, a lot of times there's prepayment penalties. So sometimes it doesn't do you any favors to pay it off early. So just be mindful of that. You
okay,
know,
so that
and
would be
just
like a business loan or a
business loans, yeah, or yeah, like a business loan. And the
Some-
banks
but some
build
of them
that in
have-
that way.
Oh, okay, so you should read the fine print.
Yeah,
Because I think
Yeah, so just double check, just
some
to
of
be
them
aware.
need to
Don't,
be. Sometimes a line of credit needs to be paid down once every couple of years, right? To keep it.
a lot of times
brought
if
to
it's a line
zero.
of credit, like we'll term it out so that you have to kind of set yourself up to pay it off, which actually helps the business owner. But a lot of times there are prepayment penalties on loans. So just be mindful of that, because you may think that you're doing the right thing by, you know, putting a lot of money in to pay down the loan, but it may not actually help you in the end. So
Good to know.
just kind of
Good to
something
have a
to keep in
banker
mind.
All right, great. So does anybody have any other questions? And maybe we'll wrap it up.
You know, going back to that issue of time, it's almost like you could do one of these spreadsheets based on the time that you spend on each of your products or services. And you get down to, it's almost like another parameter to look at, you know?
Sure. Instead of days, years, it could be hours maybe.
Right. But
So-
also instead, it's almost like looking at it instead of it's from a money point and from a energy expended point, right? Which of the services is taking more of you? You know, not only costing you more, but in dollars, but also in time.
Sure. Sure. I mean, it's a good exercise to do when you're rolling out something, how much
Mhm.
time, I mean, it's going to impact the price that you charge. I
Yeah,
would
because
think.
sometimes we don't really look at how much we're paying ourselves and how much it comes down to, like an hourly wage, right? We just,
Yeah, that's why, yeah, that's for LLCs. I added a column for the salary for the
mhm,
payer. Like, how much do you want to pay yourself? Plug
Mhm.
something in here.
yeah.
And if anybody wants this thing that I put together, just let me know. I can. Yeah.
Renee, what's your email? Renee at reneesbookkeeping.com.
Yeah. Yeah. Email me and then I'll email it to you. So it's Renee at reneesbookkeeping.com.
No
So
apostrophe.
that's about it.
All right, any other questions? So that was terrific, Renee. Thank you. And for those of you interested, we have a lunch and learn coming up on June 8th. Renee hasn't committed to joining me, but generally she has in years past, where we revisit your behavioral goals and see how you're doing. We do this in December and June, and June's a busy month for us with the trade show and the lunch and learn, and we've got.
Wait, you said June 8th? That's a Tuesday.
Yep, from 10 to 12. We have too much going on to put it anywhere
Oh, 10,
else.
oh,
So,
okay, 10, 12.
so that's where we revisit your behavioral goals that we've reviewed in December to see how you're doing and if you're hitting them or not, and if you want to retweak them a little bit. So if you're interested in this kind of stuff where you get some concrete data versus just the emotion of how things feel, please come to that.
That's a great lunch. That's a great lunch. I mean, it's a great sales training, by the way. Done it a few times, and every time you get a lot out of it.
Yeah, and David can attest to it. Jeannie, have you done it before with us? I'm not sure if you have, but I know David Quick has. But hey, all right, last call. Any questions out there for Renee? All right, Renee, terrific job. Thank you.
Thanks, Renee.
You're welcome.
We'll
Thank you.
see you all soon. Thank you.
Really
so much.
enjoyed it, Renee.
Thank
Thanks.
you, Renee.
You're
Thanks.
welcome.
Bye,
Excellent.
everybody.